Yes, guys, welcome once again to Crypto Waters, the place where we explore the crypto waters, the waters of crypto. Crypto is still in its early stages and there's a lot to learn. But for today, let's look at investment strategies. This is a continuation series of investment strategies. So we are on strategy number 2, which is value averaging. So in value averaging, here we are saying the investor sets a target growth rate or an amount of their asset base or portfolio each month and then adjust the next month's contribution according to the relative gain or shortfall made on the original asset base. So we are saying that the key things that you need to know, key takeaways here that you need to know is value averaging is an investment strategy that involves making regular contributions to a portfolio over time. In value averaging, one would invest more when the price or the portfolio value falls and less when it rises. Value averaging involves calculating predetermined amounts for a total value of the investments in future periods, then making an investment sized to match these amounts at each future period. So you're saying that the main goal of the value averaging is to acquire more shares or more crypto when the prices are falling and fewer cryptos when the prices are rising. So when you come to the differences therefore of differentiating between dollar cost averaging and value averaging is that in dollar cost averaging, the investor invests the same amount at a set time for a particular period, while in value averaging, the investor invests different amount at a time for a particular period. Then the next difference is that the investor buys more crypto because the crypto costs less, and if the crypto doesn't cost less, the investor doesn't get some more amount of crypto at the end of the particular period. But here we are saying value averaging is that the investor intentionally buys more crypto. That is intentional in quotes because the investor discovers that at this particular period the crypto is cheap. So at this particular time, the investor intentionally buys more crypto because the price is less, and vice versa buys less crypto because the price is what is high, which is a bit different from dollar cost averaging. Now, in dollar cost averaging, we are saying the other difference is that in the invested set amounts don't change no matter the market volatility or the market movement. Whether the prices are falling down, whether they are going up, the investor keeps investing the same amount. So while in value averaging, somewhat the investor is being protected from the overpaying for what, for cryptos when the market is what is good, because at that particular moment the investor now starts investing in less amount because of the cost, the price being high. Hence, what do we say at the end of the day is that in the long term, the total amount of crypto that is bought by the investor will be actually more in value averaging than in dollar cost averaging. Though it is both of them benefit, but the person who has used the value averaging gets a bit slightly more crypto. So when you look at that chart, you can see when we look at the investor A doing in DCA and the investor B doing VR, which is value averaging, we see that they both keep investing in quarter one, quarter two, quarter three, quarter four. However, for the person dealing in DCA keeps investing the same amount, which is $1,000. However, on the other side, the person who is dealing in value averaging keeps increasing the amount from 1,000 to 2,000 to 3,000 to $4,000. So at the end of the day, because the prices keep fluctuating from $10 to $12.5 to $8, then back to 12 to $10. So you find that at the end of the day, the person dealing in value averaging would have invested in more money compared to the person who is dollar cost averaging, but at the same time has also this particular set. When you look at Q3, the price of the asset fell by $8, and the person who was doing this year, which is dollar cost averaging, used the only 1,000. However, the person who was doing value averaging had invested in 3,000. So you can see that the amount of crypto that each person got was a bit different. The person who's doing value averaging got more, which is 215. However, the other person got 125. So you see the gap in profits there. You can see the gap in profits. So therefore, what are we saying in conclusion? That in dollar cost averaging at a certain average price, you find that someone has made a profit of $50, while someone in value averaging at a certain price of 9.3 has made a gain, a current gain of $280. So what are we saying in short, in conclusion, is that it's not a financial advice. You can choose whichever um, investment strategy that you prefer. Some people prefer using dollar cost averaging, others prefer using um, value averaging. However, some, according to research that was made, some they say that people who use value cost averaging actually they gain more. They get more, and we have also seen that they actually get more. They gain more uh, amount of an asset or crypto if the price has done what? If at the end of the specific period they have been buying, they gain more crypto compared to someone who has been dollar cost averaging. So with that, I would like to leave this chart of Bitcoin, which shows weekly time analysis. This chart was taken on the date of 30th of July 2022, and this the Bitcoin weekly time frame analysis shows that this is the best time to buy because Bitcoin is now um, rallying up. It's rallying up even if we are in a bear trend, which we are not sure that it might actually turn out to be a bull trend. But at this particular point, we are in a rally, which is the best time to actually if you're a trader, to take in some trades, to buy in if spot trading, and if you are an investor, you can buy in the ranges of 20, 18, 19. It's still the best time to buy. This is not a financial advice, but it is still the best time to buy, so that at the end of the day you can make 3x, 4x if it goes back to its all-time high. If you are new and you don't know issues of all-time high, those terminologies, blah blah blah, please stick around. You know them with time. And for those who already know, if you have some cryptos you have been thinking about, it's best time to now invest. And please, thanks for watching this video. Share it, like it, and if you have not subscribed, please you can subscribe. Thank you, all of you. See you next time on another episode. Thank you. Ciao.